This is Real Estate Rookie episode 212. My name is Ashley Kerr, and I'm here with my co-host, Tony Robinson.
And welcome to the Real Estate Rookie Podcast, where every week, twice a week, we bring you the inspiration, information, and stories you need to hear to kickstart your investing journey. And oftentimes, I like to kick off these episodes with a shout out to some folks that have left us some reviews on Apple or Spotify. Today's review comes from username Ali Perky. And Ali says, "We needed this with an exclamation mark. Love BiggerPockets, but we needed this show, the Rookie Show, for those that are earlier in their investment career. Thank you guys so much for this." So if you guys haven't yet, please do leave us an honest rating and review on whatever platform it is you're listening to. The more reviews we get, the more folks we reach. And that's our goal here, is to reach and help more people. So Ashley Kerr, what's going on? How you doing?
Well, I'm pretty sure I lost my AirPods in the lake last week. So
I was wondering why you had the big headphones on.
They're like the only ones I could find in my house. So they must be one of my kids. I don't know. It was either these ones or like super tiny little blue ones or like a toddler. But yeah, so I don't know. I got to find my iPhone for my AirPods. Yeah, see what happened to them. But what's new with you?
Nothing much. Just got back from Las Vegas. Not to party this time. No pool parties, but my son had a basketball tournament, so it was the last tournament of the summer. So there was like hundreds of teams out there at the Las Vegas Convention Center. I actually bumped into someone from the BiggerPockets community. I was walking out and wish I could remember his name, but anyway, it's just always so cool to meet folks that listen to the podcast like in real life. So whoever that was, I appreciate you reaching out.
Did he have a son on a rival team?
There were different age groups, so he did have a son, but my son's 14, his son was 13, so they weren't playing in the same division.
Okay, well, I did pull a question for today's Rookie Reply. This one is from Carolyn Gottlieda, and the question is, "Hi, Ashley. I'm so thankful for Tony and your podcast. It is so entertaining and educational. Thank you for bringing it down and making real estate a lot more approachable. I just bought my first investment property all cash. My husband already has a few under his name. Am I still considered a first-time buyer? What if I take a mortgage out on that property?" First of all, Carolyn, congratulations on your first investment property. That is really exciting and way to take action on that. The first thing I would say is that you are considered a first-time buyer, but that has no benefit really unless it's going to be your primary residence. Mm-hmm. So you would have to live in the property, and I'm going to go ahead and assume that you already live in a property with your husband. But if you guys are moving into this property, but you did say it's investment, maybe it's a house hack, then you could be considered a first-time buyer. But usually those advantages are when you purchase the property, not when you go and refinance the property. So for example, an FHA loan, when you purchase that, you can put as little as 3.5% down as your down payment. But if you go and refinance your property, you're not going to be able to refinance it and, only keep 3.5% equity in there in the property. So my recommendation is that when you go to a bank, yes, they're going to look at just you, and it's going to be great that you don't have any other mortgages in your name. And hopefully that will make it a lot easier for you to get financing because you don't have a large debt to income ratio. When you are talking to banks, ask what their seasoning period is. Some banks will make you wait 6 months, sometimes up to a year, if you just purchase the property and before you can go and refinance the property. So make sure you ask that before you start going through the whole application process. But most likely, the bank is going to do an appraisal on the property, and they're going to lend you 70 to 80% of the home value because you already purchased it in cash. So Tony, do you have anything to add to that on what have you seen right now for refinances on investment properties?
Yeah, first I'm glad you went first because you pretty much hit all the important stuff for making this episode easy for me. But in terms of refinances lately, we honestly haven't really explored doing any refis. All of the debt that we've secured on every single property we have outside of our flips has been long-term debt. and I don't know, we just have no interest right now to refi because we locked up so many of these properties at 3% interest rates. So for us, refi doesn't make a whole heck of a lot of sense. And even like selling some of our properties, we're hesitant to do that because we're not sure if we can get as good returns, even if we move into something bigger. So um, yeah, I mean, if you can get the cash out, I probably would. And this kind of goes back to people have different preferences when it comes to how they invest. Some people like the idea of paying all cash, not having a mortgage. Other people like the idea of making your capital stretch. I'm more of the I want to make my capital stretch kind of person. So I think as long as this property were to cash flow, even if you take a mortgage out on that, I would go that route just so I can kind of, make my capital stretch as far as it can.
I think there's a big misconception when people ask, am I considered a first time home buyer? And really, that doesn't have a huge effect on what kind of financing you can get, because in FHA, you can get that 3.5% down, and this could be your 10th house that you're buying. As long as you don't have another FHA loan in your name, you can still get it as long as it's your primary residence. There are programs out there for first-time home buyers where you work with a local bank or credit union where they say, okay, for the next 6 months, the next year, you are going to deposit this amount of money into your savings account every month. We will, add to it or match it or something like that. And then they help you improve your credit and get into a property. But a lot of times when you do one of these programs, you have to own that house and live in that house as your primary residence, sometimes up to 5 years, where an FHA loan, you only have to live there for 1 year. So I think that's kind of like ties your hands behind your back a little bit, because if you're locked into a house for 5 years and it has to stay your primary residence, unless you want to commit mortgage fraud, which we do not condone here.
Yeah.
So that I don't think there is a huge advantage to those programs. I think if you guys are here listening to this podcast right now, you have some kind of motivation to save money on your own for your down payment, and you don't need to go to a bank to help you with saving that and then lock you into living in a house for 5 years or whatever it ends up being.
Yeah, that's a good point, Ash. And just one last thing to add is that even outside of these first-time homebuyer programs, there are lots of other programs and grants to help people purchase their properties. Again, this doesn't apply so much to the investment property side, more so to the primary residence. But like when we bought our first home, our first primary residence, we had the option of going with this first-time homebuyer program. But then there was also California had this grant. It was called like the California Housing Federal Administration grant or something like that. But it wasn't just restricted to first time home buyers. It was open to pretty much everyone as long as you met these certain criteria. And that grant covered the majority of our down payment. And it was like a super low interest loan that was spread out pretty much over the life of our first mortgage. So there's so many different options that you can kind of seek and find if you're looking to get some assistance with your down payment. But to Ashley's point, if you're looking to be an investor, you kind of gotta save up some of that capital. Unless currently you're trying to house hack. If you're trying to house hack, then obviously this is a great, fantastic approach for you. But just don't be so fixated on that first time home buyer. There's lots of other programs out there as well. I think just finding the right lending partner, the right mortgage broker to help kind of bring those to your attention.
Well, Carolyn, congratulations on that first investment property. And hopefully this episode will kind of help you what to decide with that. Thank you guys so much for listening. I'm Ashley at Wealth from Rentals, and he's Tony at Tony J. Robinson. If you guys are loving the podcast, please leave us a 5-star review on your favorite podcast platform, and we will see you guys next time.